Welcome to TradeTheMBI.com. This is John. This report is for the 20th of July, and well, nothing is shocking us. I mean, we had the MBI Magenta lead back over here at the 23%. That provided the support that we were looking for. We got the crossover the very next day on what was a down day, and that led to our expectation that above 38% certainly would be a long case pushing towards the 50, and that we had pretty strong DOC midterm, long-term buyers popping up with the perfect orange dip underneath. So none of this was a shock, especially after we've had rising gold within this. Shakeout's now positive, so critical right here at the 50. We've already hit it pre-market. It's traded off of it just fractionally, and the question now will be looking for a turn down of the magenta. Going there would be the end of that rally move. Shorts have just pretty much not been existent within this, and even short-term buyers have faded off, so they're going to be reset. So there's still potential for the move. NASDAQ almost identical from a Morganacci standpoint here, right at its 50% as well, but a little stronger. We almost have the crossover of green over the cyan, but as that orange continues to rise, if it shoots up, that could end it pretty quickly. So far, nothing terrible on that standpoint. The euro still in its massive rise, just as a nice turnaround. We expected that often when you break these lows, they make that run back up to the break of it. And certainly, once that parity was reached, central banks got involved, and of course, this idea that the U.S. may soften their position, I think, is unlikely. The Fed has to get the inflation at least mitigated or somewhat under control. Are they going to be too aggressive, too late? Yeah, they're too late. They should have been doing this for several months ago, and they could have done it at a much smaller, more controlled pace that would have been more effective. But obviously, when we start to see what it does to the deficit numbers, I think it'll become apparent why they've waited as long as they have. It's keeping gold pretty much neutered at this particular stage. Nothing happening there. We get a little bit bullish crossover right here, but coming off this depth, the best you're going to get would be a move back to the 23, and that would be the most positive. But it's likely to have another down wave in between that. And from an oil standpoint, right back at that 100. Contrary news, they announced that Nord Stream will come back online after it shuts down, according to reports. So that's what led to the massive turnaround and everything, that Europe has been saved the calamity, which is also why the euro has had some support there. Remains to be seen. Of course, the shutdown starts in a couple days, and we'll see if they get their turbine. Sort of that hardball geopolitics, when sanctions are only sanctions until they really, affect you as the person sanctioning others. And from a treasury standpoint, we still expect rates to continue to rise, which would cause TLT here to continue to drop and fade. It's just a question of what pace and how much money that draws from the market. That's going to be the critical aspect. For now, with the oversold nature of the market, so many people bearish, it was an easy turnaround, bullish pop. Whether it's sustainable, that is a separate issue, and I don't know that it is completely sustainable unless the economy is able to really absorb these exorbitant prices, and that we have to see how the consumer reacts. And so far, the numbers haven't been good from a consumer reaction, so we'll see if they're tapped out or able to get new wage increases that will sustain the move. Bitcoin, as I talked about, positive move there. We expect it at least back up towards that 23, right there, and right at a key spot, because if the white MBI takes over magenta in this particular case, I would expect to start seeing at least a middle tone back and forth around that 23, and particularly if magenta starts to fade, then you're going to be getting whites in the lead. I'm looking at a move all the way back down to the lows at the 18. From a 50K standpoint, it's been beautiful from that turnaround. We had red leading this, and making the adjustments for some of those, particularly when it comes to the short case Once magenta's over that 25, it's usually a pretty strong case from an upside, and definitely once green is over, you're pretty much all set. That's why it turned green on that particular state, waiting for the green crossover. But making those adjustments to really tighten up the returns for the Opus 2T, that'll really get that finalized. From an intraday, this is pretty straightforward. It's like one of those where you just mark positive extremes, you keep going, continue to mark them as it goes, and we knew that once it started it would be pretty strong, as I talked about a few days ago in my report about with the bias so strong that people would cover in some spots, the smarter ones cover earlier, others let it continue to go until it gets into a max pain, and then they're forced to cover, and that really skyrockets things. And you can see the effect of that. Still more positive extremes being developed. Those still back here in the pre-market already. So it's a pretty dynamic situation, and it continues to unfold. But that's the beauty of the volatility of it, and we're just able to follow the signals as they continue to pop back and forth. I think there's still going to be plenty of range, both up and downside, as this gets sorted out a little bit more. The potential for downside, though, I think is still stronger, whereas before, when the Fed was fighting for the market, I think the downside had lower chance than upside pushes. So we've kind of inverted that a little bit just because of the Fed, because you never want to fight the Fed, but they just don't want things to go too quickly, too fast. So they're trying to play damage control, and this is what you get in between. But of course, as I've always pointed out too, as much as things get negative, with the inflation rate running as it is, the new basis of what some people would think the market needs to return into, under 2,000 range, I think is a little ridiculous, because just with the deflation, or at least the devaluing of the dollar, from an inflationary standpoint, you're automatically going to get, 15 to 20% just bonus into the value of the index, even in a recession, simply because of that. The market doesn't really take much to devaluations. So we'll see how it plays out, but I think that's pretty good. I still think that, anywhere between that 28 to 33 range, where we hit the lows from before, still becomes that new basis, and unless things really start to fall apart economically through either significant food shortages or major disruption of oil, and that hasn't happened yet. So again, just biding more time, and until that actually plays out, we just have to follow it with where we're at and continue to go with the ups and downs. As always, though, look for me on the Skype chat. Continue to post charts as they're relevant. Trade well. We'll talk to you later.